Hello everyone, this is King Helps. Welcome to this new teaching in our technical analysis series. In this video we're going to be going over premium, discount and equilibrium. So let's hop on. So first of all, establishing what premium and discount is, right? So whenever price creates a trading range, which is characterized by a range high and a range low, right? This range can be delineated into two regions, namely premium and discount, right? So when we go from, let's say, higher low to higher high, what do we have? A range high and a range low. So this range high and range low, the range can be divided into two regions, namely premium and discount. Now let's take this analogy. When you go shopping online or at the store or in the market, you typically want to buy things at a lesser price than the actual market price, right? So let's say, for example, a bag is being sold at $50. Now you try to reprice to $45, right? You try to negotiate to $45, or you try and wait for things like Black Friday, where the product will be offered at a discounted price, right? So that you can buy the item at a lesser price than the market price, right? So let's put this here. That means essentially discount is to what? Is to buy. What do you want to do at discount? You want to buy. So discount is to buy. Let's go further. As a business person, you typically want to sell your products at a higher price than present market price. This is premium. So let's say you have a house that you put on the market to sell, and you bought the house at 200,000. And so a few years later you want to sell this house. Now of course, in between the time you bought the house and when you want to sell, of course you expect that you're going to sell the house at a higher price, right? So the price at which you're going to sell, since it's higher than the actual price, is called a premium price, which means premium price is for what? Selling. So premium price is to sell. So in the same way, when I show you how to delineate your range into this premium and discount, what you want to be doing is that you want to be selling when we're at a premium price, and you want to be buying when we're at a discounted price. So I'm going to hop onto the charts and explain this further. So before I show you this, it's important you understand the importance of premium and discount. We talked about in the previous video how the intent behind price movements is to seek liquidity, right? And we've talked about market structure, how we go from higher highs to higher lows, and we said above these highs, what do we have? Buy side, and that within the range we have internal range liquidity, right? Now we're going to be talking about fair value gap specifically. So now, how do you know when to expect these retracements, right? Because there could be a case where, like in the previous video, like I mentioned, we could have one fair value gap, two fair value gap, three fair value gap. How do you know the range in which you can say, yes, we are now at a discount price and I can now start buying? Because discount is to buy and premium is to what? Sell. So this premium discount array helps us understand within our trading range when we are in a premium and when we are in a discount. So let's use this example. What we use essentially to delineate what is premium and what is sell, or to differentiate what is premium and what is discount, is equilibrium, right? So the difference, or what separates premium from discount, is equilibrium. So essentially, if this is a range, this rectangle, this full rectangle is a trading range. Let's say these are higher low, these are higher high, so that's the range low, range high, right? The 50% point of it is called equilibrium. So whatever is above 50% is called premium, and whatever is below 50% is called discount. Now if you are looking to if you are looking to buy, so let me just use this as a chart here. So these are what? Let me come over here. So now over here, let's see, it's our higher low, these are higher high. If you are looking to buy, what do you want? You want price to return below or to equilibrium, because now once we reach equilibrium, right, now we are at discount. Anything below equilibrium is discount. So what you want to do is that you want to start buying when we're at discount, and then expect higher prices. So it will be unwise of you to be buying when we're at premium, because the price is still rather high. We want to buy this when we have a discounted price, essentially. So let me just brighten your morning or afternoon or whatever time it is you're watching. Imagine we had a fair value gap here and you traded from this point. You'll have lost your money. But now you have further refined your idea, and now you'll be looking for a fair value gap within what? Discount, because you know that discount is to buy. So let's move over to the charts. The tool that we use to outline our premium and discount array, or premium and discount, is called the Fibonacci retracement tool, and it's this tool right here. Right, it's in your panel over here, just check. Right, so now in this case, let's call this our range low. These are range low, and these what are range high, and buy side liquidity is resting above it. Now when we carry our Fibonacci retracement tool and we set it from the low, you want to put it at the low of the body, not the wick, because the wicks can be manipulated by your broker or the analysis platform you're using. So you want to use the body. The body doesn't lie, right? So you use the low of the body to the high of the body of that range. Now this is typically what the Fibonacci tool is going to look like, right? So now as you can see here, we have 0.5. so this 0.5 means 50%. So there are further settings you can come and make to this. You can watch videos on YouTube on this. So I could decide to use percents, right? So now it's showing me 50% equilibrium. So I know that this green line is my equilibrium, and that anything below this green line is what? My discount, which means I'm looking to be buying at anything below this point. So of course I've made some refinements to mine to only show me the 50% point. So this is the 50% point. Now I know that, okay, I can further refine my trade setup or my trade idea, because I know that I should not be buying while I'm at a premium. So here's a fair value gap here, but of course you can fully ignore it now because you don't expect price to retrace from a premium price. But now that we have a fair value gap here, you know that if we're expecting price, if you're expecting to buy, you should be expecting to buy from a fair value gap within what? Discount. So now let's keep going forward, shall we? So let's establish another trading range. So over here as well, in between this range low and range high, what do you see? This is 50%. Do you see how price traded below 50% before going up, right? So those are the things we are on the look for. In this case too, look at it, 50% price traded too. So let me just widen this, right? Do you see price came to discount and then went for buy side liquidity? So we can keep going forward and see examples like this. So these are new range, right? These are range low, these are range high, these are Fibo from the body to the body. And then now we can pay attention, because now what are we looking for? We're looking for premium price, and premium is above, discount is below. So premium over here, what do we have at the premium? A fair value gap, right? Let's keep going. These are new range, range high, range low, above 50% premium, sold from there. Let's look at this, range low, range high. This is 50%. Below 50%, we're looking to what? We're looking to buy, right? So it didn't come in this particular case, but don't worry, I'll show you something in the next couple of videos. So in the same case over here, 50% price traded below it and went up. So now keep in mind we're on the daily time frame, and I told you how I'm going to be showing you a day trading strategy, which means you cannot be making entries on the daily time frame. You want to come to the daily time frame and essentially look for market structure, or what market structure is doing, and then you go to the lower time frames to do your trade executions and further refinements. So I just wanted to show you this premium and discount tool and explain how to use it, and the Fibonacci retracement tool. And for now, that's it for this video. Going forward, I will go into top-down analysis, go into my strategy, into risk and reward. So for now, that's all for this video. Go into your charts, try and outline the range high and range low, right? And look for how price trades from discounts when you want to buy and trades from premium when you want to sell. So for now, good luck and good trading.